Hello, everybody. Welcome to our Investing in New Zealand webinar. Very excited to be presenting to you today. Now, every good presentation needs to start with a legal disclaimer. And the legal disclaimer for this presentation is everyone at Williams Corporation, so myself and Anaru, we are not financial advisors. We're not giving you financial advice. And please seek your own financial advice before making an investment decision. We're going to do a question and answer session. So anytime you have any questions, write them in the messenger box. So you'll find the messenger box at the top or the bottom of your screen. It says chat. Write them as we go. And then we're going to hit all of your questions at the end of the presentation. Tonight's agenda is we're going to have an introduction to the speakers. We're going to discuss the New Zealand property market. We're going to discuss why New Zealand is an attractive investment for Australia. We're going to discuss lending and how to get lending in New Zealand. We're going to talk about Williams Corporation, and we're going to do a question and answer session. So it's going to be a lot of fun, and I look forward to presenting to you. Now, a quick introduction to the speakers. I am Matthew Horncastle, Managing Director of Williams Corporation. I'm from a property family. I'm qualified as a builder. I've owned a business since 2011. I think of myself as a thought leader in the New Zealand business and property space. I'm heavily invested in property with my own personal portfolio, and I'm the co-founder of Williams Corporation, which is one of the largest privately owned builders in New Zealand.
Yeah, my name's Anaru Preston, and I'm the Sydney Sales Manager for Williams Corporation. As an investor myself, I've also carry with me experience of real estate in both New Zealand and Sydney.
Greetings, everybody. I'm Sam Hawke. I'm a New Zealand-based financial advisor. Been in the game a long time now, so approaching 10 years, settled in excess of $200 million worth of loans during that time, and a member of the largest financial services group, NZFSG.
Fantastic. So the main thing is all the speakers today are experts in our field. We've done the hard yards. We've learnt the lessons we need to, and we're really here tonight to add value to you. So let's have a look at the New Zealand housing market fundamentals. Now, starting with the average house price in New Zealand. Now, when you look at the New Zealand average house price back since the early 1990s, you can see that we have had a lot of growth. So the New Zealand property market has performed incredibly well, with the exception of this COVID boom. So as with most countries, most commodities, we had a large amount of government printing of money, and we had a period of assets being overvalued, followed by a correction. And we're going to dive into this a bit deeper later in the presentation. But the main thing I want to emphasize from this slide is there's some fundamentals I'm going to discuss with you that is causing New Zealand's property market to grow on average 8% every year over time. So one of the main issues of the New Zealand property market's performance is the world is a hard place. Now, I'm not going to dive too deep into this because this could be a whole presentation in itself, but there's a lot of people that live with a lot of hardship. There's a lot of countries that have serious issues that they need to address. And New Zealand's mostly sheltered from the pain and hardship compared to the rest of the world. And we live a very, very high quality of life within New Zealand. And so then in return, what happens is we've had a really, really steady growth of New Zealand's population. New Zealand's population's just grown like this. And the only reason it's grown like that is because of our immigration policy. Now, without our immigration policy, our population would double overnight. So there's so many people that want to live in New Zealand. But even if we follow our current trajectory, New Zealand's population is forecast to double by 2050. So for every one house we have currently, we need approximately 2 by 2050. So you can really start to see that housing pressure that we've got as a country. And one thing in New Zealand is we don't have a strong enough construction sector. We are not building the homes required to keep up with our population growth. So our houses, as far as deliveries are concerned, have actually declined since 2017. So we're just not building enough houses to keep up with these people coming into our country. And one other thing that's really interesting is the average people per dwelling is decreasing. So in my entire lifetime, New Zealand's average people per dwelling has gone from 2.6 down to about 2.2, 2.3. And so what that means is we actually need more houses for the same size population. So as that people per dwelling decreases, we need to increase our housing stock before the population increases, and the population's increasing on top of that. So we have a situation where demand for housing is larger than supply of housing. And any first grade economist would tell you in that scenario, prices increase. Now, on top of a fundamental difference between supply and demand, we also have replacement cost of housing going through the roof. So the rough rule of thumb for my career is that construction inflation has moved at a rate of 2 to 3 times customer inflation. So that's the inflationary index versus what we see in the construction sector. So what we're seeing in the construction sector at the moment is construction inflation moving at approximately 14%. So when you have the price of replacing an asset always more than the asset itself, you can see why these assets continue to increase in value. And that's really the New Zealand growth story. So the story is our population, our median house price has shown us that over the last 42 years, it's gone up on average of 8% a year. There's a lot of people in the world that face real hardship, and New Zealand faces far less hardship than everywhere else in the world. So lots of people want to move to New Zealand. We're not building enough houses to keep up with that population growth. The average people per dwelling is decreasing, so that's putting more strain on housing stock. The average replacement of housing is increasing. And that's the New Zealand growth story. That is why myself is heavily invested in New Zealand property, especially residential property. It's why Williams Corporation is, it's why my family is. Those fundamentals is why I really believe in this asset class and believe almost everyone should have this in their portfolio if they can afford it. So let's talk through a few benefits of investing in New Zealand property, Anaru.
Cool. So just once again, just a quick disclaimer. So this is not financial advice. Please seek some financial advice before making any investment decisions. Now, when it comes to benefits of investing in New Zealand, they are quite significant for Australian citizens. I think the biggest ones of all is being no stamp duty and no annual land tax, with both of those factors being quite significant in terms of offsetting the potential for cash flows. So with that in place, there is no stamp duty and no annual land tax for either New Zealand citizens or Australia citizens. There's also Australian and New Zealand tax treaties. So when it comes to taxation, you're only taxed on one end, not both ways. Capital gains tax is a very common question I've been asked as of lately. So in terms of your obligations here in Australia, when it comes to capital gains, so the same rule applies. If an investment is held for a minimum of 12 months, you're only taxed on 50% of the capital gains. Depreciation and negative gearing. So both of these factors you're not able to claim as as a New Zealand citizen, whereas as an Australian citizen or an Australian tax paying resident, you're actually eligible to claim your depreciation, as well as you're able to claim in any negative losses that may be made in New Zealand investments. So very, very beneficial in each and every one of those factors. So
yeah, that's really, really positive. New Zealand, we have very economically free property market, very little taxation compared to other mature property markets. And that's why so many people love New Zealand and New Zealand property. So Sam, let's talk to us about money. How does the money work?
Well, I'll just start by saying apologies to anyone that did tune into our last podcast. There was a small incident in my hotel room, which meant that I had to escape, and we had to cut it short. But thanks for tuning back in. We're going to get into the good stuff again tonight.
It was a fire alarm. You made it sound like it was Anyway, carry on. I'm looking
There's been enough disclaimers. I will caveat one more time by saying if you do want to have a discussion with me, that we can do that on a personal level after this is finished, right? So the purpose of my chat tonight is to fill you in on all of the options that exist within the New Zealand market by way of lending, and I'm going to start off with the curly one, which is Resimac. So Resimac is actually a non-bank lender. They are publicly listed throughout Australia and New Zealand. One of the biggest benefits that they offer within the market is they are more liberal than the bigger banks. So they will let you borrow more, and they will, in most cases, look at your income more favorably. Now, there can be a trade-off on occasions where the interest rate is slightly higher than what the big banks offer, but in comparison, their terms are very user-friendly. So just rattling through a couple of those. Maximum LVR when you purchase brand new stock off the plan, such as buying through Williams Corporation, 80% LVR. That is the exact same as me as a New Zealander would get offered on the ground. So you're not being discriminated against or losing out in any regards there. Bigger banks, which we'll touch on in a minute, can be as low as 60% LVR. So extracting your equity or coming up with a cash deposit out of Australia, you only need to find 20%. There is no shading of your income, so treated dollar for dollar. What you earn is assessed at the same at face value. Both PAYE and self-employed applicants with this lender. Self-employed applicants, this is the only lender that we can get you through. However, we can get you through. Okay, so that's the most important thing to note. No discrimination again. Approval period can be a touchy subject with regards to turnkey purchases. Approximately 60 days out from completion, but we're not just going to let you go gung-ho into a new purchase, particularly if you haven't got on the ground and had a look around. We would meet with you or do what we need to remotely to confidently give you advice around your borrowing ability so that you're not left high and dry 9, 12, 15 months down the track, depending on what development you look at. So we're here to hold your hand throughout the process. Right, into the big banks. So the big four banks, pretty much the same as Australia. The Bank of New Zealand, BNZ, open to Australian citizens again, permanent residents and visa holders that are living in NZ for 6 months. Okay, slight shading around your income, and unfortunately, it's just PAYG or PAYE as we say here in NZ. Okay, so salary and wage earners alone. Offshore rental income, most importantly, if you've got a big portfolio, is accepted. There's a small shading again, but don't be too concerned about that, because if you've got a large portfolio, that can go a long way to making up some of your income, and BNZ in particular recognise that. Best part about them, probably apart from the interest rates that they offer, is 12-month pre-approvals that are quite easily rolled over. So if you're someone that is new to the market or has concerns about what lenders might come up with in the future, a 12-month pre-approval can be obtained, rubber stamped and held onto until your property has completed. So you've got absolute protection there. Probably one trade-off is you've got to jump on a plane and come to NZ, but you'll get to check out your development. So what's bad about that? Table on the right just briefly shows the current interest rates, and I'll touch again on this in a second, but being a big bank or one of the big four within NZ, their interest rates are typically market leading. Westpac, pretty similar. Maximum LVR if you're an Australian living in New Zealand. There might be a few of you out there. 80%. If you're living overseas or residing in Australia, it's 70% LVR. Unfortunately, as I touched on at the start, no self-employed concessions here. You must be a PAYG or PAYE salary and wage earner. But again, 12-month pre-approvals, offshore rental income is accepted. You don't have to come to New Zealand if you don't want to. We can do everything remotely by a subsidiary in Australia. And interest rates on par, basically, based on today's rates. Sweet. So looking across these three lenders, and these are the lenders that we've got access to right now. A very, very important point to make would be that within the last 2 weeks, the other two major banks in New Zealand, ASB and ANZ, have started making waves and suggested that they will also open up to the Australian market. Very important for ANZ here in New Zealand. They have a 50% market share. So it would well and truly open up the floodgates, and I think you'd see more competition between lenders, and things like being able to have a loan approved when you are self-employed, for example, might be one of the first things that they look at. Okay. So across those lenders, we've got access to Resimac. They will do your lending where you are self-employed. We have the two of the four big banks within New Zealand that will look at you if you're PAYE or PAYG, and all of your offshore rental income is assessed across all of those lenders. So we're definitely open for business in that regard. Yes, it's not precisely the same as how your loan is assessed in Australia, but for the most part, we operate under the same set of guidelines and regulations. So anything that you need to provide in Australia to get your loan approved, it's probably similar to what we're going to need here. Right, interest-only repayments. Now, I thought this to be the norm across all banking sectors throughout the world. Apparently, it is not. I know for a fact in Singapore, you can't get interest-only loans. I'm unsure precisely as the terms across all banks in Australia, but I know within NZ, getting up to 5 years of interest-only repayments is a big tick for most investors, just purely for cash flow purposes. And our ability to roll you from one lender to another or reapply for interest only always exists. So banks will offer interest only for up to 5 years. Typically towards the end of it, they'll want you to roll on to principal and interest. If you're not into that, we'll tell that bank the same, or we'll go and find another lender for you so you can roll it over. Ability to deduct your interest costs, probably more tax or accountants speak, but at the moment you can deduct up to 75% of your interest costs or claim those against the property. A change in government, which could occur at the back end of next year, would see that rolled to full deductibility. So all of your interest costs associated with owning the asset would be fully tax deductible. That's not a fait accompli by any stretch, but it could happen and would sweeten the deal if you were to look at a property and have it settled towards the back end of next year. And finally, the one that everyone loves, particularly at the moment, so interest rates, right? Going through a bit of a rough period here in NZ with regards to inflation, Reserve Bank, government kind of going at it, working out how to keep that under control. Historically, interest rates in New Zealand will probably sit between 4 and 5%. On a historical average, you'll see fixed rates for 1 to 5 years, anywhere between 4 and 5%. At present, we're higher than where we're higher than where we would be historically. That's all off the back of the inflationary pressures that are going on globally. We're going to see a steady decline in interest rates once inflation is under control. So yes, you might not like the look of them right now. I don't, but it's just the world that we're currently living in. The reality is that interest rates will fall to normalized levels very shortly after inflation is under control. Benefit of the turnkey again is that you can decide which development you purchase, and in time you can almost try to predict where interest rates will be. Something that settles 24 months from now, for example, is likely, or you're likely to be able to obtain rates that have 4s in front of them rather than 6s. So for cash flow purposes, rather than going out there in the market now, definitely all roads leading towards turnkeys. But there are other pressures and there's a lot going on globally, so it's not a sure thing. But we know, again, on historical averages, we should be floating back into the 4s and 5s for your fixed rates in around 12 to 18 months' time. Cool. Oh, last piece, sorry. Yeah. Interest rates that are on their way up or have hit their peak already, I'm of the opinion that they have definitely hit their peak, and we'll see fixed rates normalise a lot sooner than some economists predict. Rental income, your tax relief with the change of government next year. Keep harping on about that, but in reality, it does make a large difference to your numbers with regards to cash flow. And the overall outlook in the market with banks, I think we've seen a lot of tightening over the last 2 or 3 years in particular, just around credit appetite and policy. Bringing those bigger banks, ANZ, ASB, back into the market will just provide more competition and ultimately more opportunity for you guys as borrowers. So if there's any questions at all, just fire them through at the end. Thank you.
Yeah, just before I go on to mine, I reckon you covered some really interesting topics, as always, Sam. My comments off the back of what you said is our dollar's really strengthened for the last 6 months. So it's rised against the USD. It's rise from 55 cents at the low up to 62 cents today. So we've had a huge strengthening of our dollar. Now, New Zealand, as a net importer, not a manufacturer, that really helps with our inflation because we're importing a lot of food. So obviously a strengthening dollar helps. With the change of government, the polls are saying, obviously you never know in politics, but the polls are saying we'll have a change in government. And as you know, the incoming government will reduce taxation and things like that. So yeah, that's all really positive. And I think that the future of New Zealand is very, very bright. So who is Williams Corporation? Williams Corporation is a residential property developer that builds homes that are affordable to buy, affordable to live in, and affordable to maintain, where you can live, work, and play. We are one of the top builders in New Zealand. So this is an independent report from the Building and Construction Institute of New Zealand. This report annoys me because we were second for about a whole year. So we jump around in the top 4, depending on how many consents we received that month. But what I really want to emphasize is we are one of the largest builders in New Zealand. This is a little bit of our history. So last month, we delivered 48 houses valued at 33 million. This financial year, we deliver on average 3 houses every working day. In our career, we've delivered 1,477 houses valued at $807 million. Our average consenting time is just over 6 months. Our average construction time is just over 8 months. And our total average time is just over 15 months. So we're extremely efficient at what we do. Now, we work on a development for approximately 3 months before you, the consumer, see that project. So the average development from when the customer signs to when the customer gets their keys is exactly 12 months. So really, really good track record in the company. Our homes look great. A few key points, they're turnkeys. So we provide the blinds, we provide the landscaping, we provide the appliances. We do everything to make it easier for you. You look at that car park, you'll notice that it's concrete, not asphalt. That's because it decreases our maintenance. We make sure we do all the little things right so you get your tenant. We have the electric vehicle charging points. We put in the washer dryer combo. We think through everything and try and make the process easy for you. So we've been in business for 11 years. We design the house for an investor because the design for an investor is good for everyone. Low maintenance, able to have someone live in it. We want those factors there for that house to perform. Whether the customer is a home buyer or an investor, we want those factors in place. So I'm going to present to you an investment opportunity that I'd like you to consider. And this is called Manchester Square. Now, Manchester Square is a beautiful project. It's our largest development to date, consisting of apartments, commercial buildings, and terrace homes, located in the heart of Christchurch CBD, where we have a $35 billion rebuild well underway. It's a beautiful looking project. The apartments, 1 bed start from 649,000, 2 beds start from 789,000, right up to $1.7 million for the 2 penthouses, which have both sold. The terraces are 849,000 for a 2-bed and 959,000 for a 3-bed. And the commercial starts from $429,000. So a wee summary of how good the location is. Hopefully you can see my cursor. So you can see the site is right here. Now, I know this site very, very well because I live right here. I walk past this site every single day. We have a beautiful Margaret Mahy playground, which is a $30 million playground right here. We are building our 35,000 seat covered stadium right here. You've got all the things you expect in a CBD, such as the bus exchange, shopping. We've got malls. We've got a fantastic bar and restaurant district called the Terrace. We've got a farmers market. We have a convention centre. We have our town hall. We have Hagley Park, which is one of the largest central city parks in the world. We have the Christchurch Hospital. Now, the Canterbury District Health Board is the largest employer in the South Island, employing 6,000 staff. And we have our Sports and Recreation Centre, which is the largest in New Zealand. And this is all within the CBD. And the project is right here. So you could, if you're on that project, from one corner of the site, you could throw a stone into the Christchurch Club, which is one of our very, very famous clubs. And then from the other corner of the site, you could throw a stone and hit our cathedral. So just the location, if you haven't spent a lot of time in Christchurch, it's very, very, very good. So the summary is, New Zealand property market has performed extremely well, and all of the factors that caused it to perform are still in place. Australians can purchase in New Zealand, and I believe it's an opportunity that you need to look at. We have lenders that would love to help you through the process, and we are a good company filled with good people that build a good house and want to look after you and want your business. So let's get into some questions. I'll open up the chat from our team and see what we have. I can see them writing now. But Sam, do you have anything, just while we're getting the first questions documented, do you want to talk through probably like maybe finance you've done recently, what that looked like for the customer, how much equity they had to put in, etc., or maybe some of the Singaporean stuff and what that's looked like?
Yeah, as I said before, it's definitely getting easier. We call that space within the banks their credit policy or their appetite, which tells me that they are out there trying to entice your business. So it's a great starting point for any consumer or any customer. Probably specifically for an Australian, you're going to encounter two things. Do you have the cash where you can come up with the deposit, so cold hard cash that's liquid, or are you trying to extract from equity within your Australian-based portfolio? So that's probably the one part of the transaction that we can't assist with here in NZ, but there will be your existing advisor or your lender, or through Anaru or someone where you can find someone that can assist with that. So if you don't have the cash, but you're asset rich and you've got good equity, there really is no reason to look at purchasing that property in Australia over New Zealand for all of the reasons that Anaru covered off. Like from my end, it just appears an absolute no-brainer. Now, there's obviously risks in each market. If it was that easy, everyone would be doing it. But I think from what I've found in previous dealings with clients, if you can get around the deposit portion, if you can extract that equity from within your existing portfolio, then the process within New Zealand to assist you with getting that loan, it's actually relatively seamless. That's the commentary that I've had previously. Yeah.
Very well said. Now let's get into these questions. How does the Christchurch market compare to the Auckland market for investment? Really good question. So Auckland's the largest city in New Zealand. There's 1.6 million people. We have opportunities in Auckland. If you want to buy Auckland, I'm not going to talk you out of buying Auckland. Now, Christchurch has performed slightly slower from a capital gains point of view because we've had slightly less capital gains. Our houses are more affordable to purchase, and in return, our yields are slightly higher. So if I was to say, what is Christchurch versus Auckland, looking at the past, we've seen less capital gain, but more rent returns, and I can't see any reason for that to continue. But in Christchurch, we've had the earthquake, and we've got this huge rebuild, this $35 billion rebuild. So I believe in the future, we may see that switch where we see disproportionate gains. But if you like Auckland and you believe in Auckland, talk to one of our client consultants and we'll present our Auckland options to you. Next question, Sam, does it mean that I can use my Australian rental income as proof of income if I go through a New Zealand bank?
Yeah, absolutely. Yeah. There's there's no restrictions around the types of income. It's just only in that example where you are self-employed over being PAYE. So yeah, 100% your Australian-based rental income would definitely be considered.
Are you worried about building in earthquake city? How do you make sure your homes stand the test of time? Now, I have a really fantastic presentation that I do on how we build our homes. I'm not going to do it just because it's like a 10-minute lecture that I do, but we have a fantastic video on all of our socials and our YouTube about how we build our homes. I highly recommend watching it. We came from the Christchurch earthquake. That was when Williams Corporation was founded. We've studied earthquakes, engineering, and we've gone through the process of how to build a house that is resilient to earthquakes. So you can't say we've solved that problem, but we've taken all practical steps to mitigate that problem. So I highly recommend watching that video and understanding it, but I can confidently tell you that we're really on top of that. If I have a New Zealand passport, but now an Australian resident, what would be my best pathway to buy an investment property? I assume that they mean in New Zealand.
So it's a New Zealander living in Australia?
That's how I'm reading it. If I have a New Zealand passport, but now an Australian resident, what would be my best pathway for buying an investment property?
Well, I guess the free trade agreement spreads right through all of that, in the sense that there's no restrictions on your visa or your passport type in terms of where you can purchase. So yep, open for business. The pathway, however, from a lending perspective, would probably be determined by what your future plans are. Are you planning on staying in Australia? Do you intend to move back to New Zealand? How far into the future is that? Are you getting an investment property to get on the ladder purely for affordability purposes? Are you living in Australia and can't afford to buy yourself? So there's a few questions I'd look at to make sure that you are starting off at the right point. But yeah, no restrictions from a finance perspective on what you can and can't do.
Fantastic. Anaru, this is my question. You helped a Sydney investor on Friday buy one of our Brisbane houses. I think you should just give the elevator pitch as well on what we're doing in Brisbane, just so people are aware if they go, hey, I really like these guys, but I can't get my head around New Zealand. Just to explain that we do have Australian investment options.
Yeah, of course. So in Brisbane, currently, we are offering townhouses in the Logan district, which is south of Brisbane, approximately 20 to 25 minutes south of Brisbane CBD. Now, as Matthew mentioned, I have helped a few customers in terms of getting into that specific development site. And a lot of Sydney-siders are seeing a lot of value there with the amount of population from Sydney that has moved to Queensland specifically. With it being the second largest state, also a lot of Sydney-siders have been seeing a lot of value there. So in terms of the affordability and, when comparing it to Sydney, it's quite significant in terms of the price difference. To take note and go out of context a little bit, in terms of Auckland, Auckland is the Sydney of New Zealand, just on a smaller scale. So to give you that type of comparison when looking at the Auckland market, Sydney is very much the same. So people are looking specifically at other areas out of New South Wales to invest in, more specifically in that 500 to 600 price range. So there's a lot of value in Brisbane with the increase in population, as well as the cost of living is much more, reliable when you're comparing it to New South Wales. And you've also got the amount of money that's been invested by the government in terms of infrastructure for Queensland because of the Olympics. So there's a lot of infrastructure, there's a lot of volume of money moving to Queensland. So I'm a big believer in following where the money is moving. It only makes sense.
Fantastic. Well, I think we leave it there. And I'm clicking and nothing's happening. So to summarize this presentation to the Australians watching, I really believe in New Zealand. I believe in the New Zealand growth story. We still have a very favorable tax structure. Us at Williams Corporation, we are good people that build a good home. I highly recommend reaching out to one of our client consultants or sales managers such as Anaru. And for finance, reaching out to Sam Hawke, who's an absolute legend at what he does. He does my personal finance for my trust and my estates. He's a really, really good guy. He's exceptional at what he does. So reach out to us, have a look at some investment opportunities. Everything that I have sold, the customers have always been stoked and super happy that they did it. So take the first step with us. We want your business. We want you as a customer. And thank you very much for watching this presentation. Have a great day.